Hello everyone, my name is Jon Dudgeon. I'm co-founder of Blue Sky Chartered Accountants, and this is
Dave Gibson, also co-founder of Blue Sky Chartered Accountants.
That time of year is upon us again. The 5th of April is looming, the tax year is about to close. Today we're going to give our top 10 tax tips for you to be thinking about. Question number 1, Dave. So, when should I be thinking about completing and submitting my tax return?
Well, John, as soon as possible is the key thing. So the tax year ends on the 5th of April. You should be looking to get all the documentation you need together, certainly over the following few weeks. The actual legal deadline is the 31st of January 2019, and that's the time at which you need to pay the tax.
Top tips for individuals. First up, what's going on with dividends these days?
Dividend allowance is dropped to £2,000 now. So for the number of you out there that are relying on dividend income, you'll pay more tax.
I'm a really generous guy. Should I be giving cash gifts to people?
Cheers, mate. Consider that, yes. So gifts of up to £3,000 are exempt from inheritance tax. So if you've got a load around that you don't need, then certainly do that. If you haven't, but you have rich parents, don't forget to ask.
What's happening with capital gains tax today?
Oh, it's all a little bit mad. They keep reinventing the rules here. Capital gains tax will kick in at different rates depending what you're selling and when you're selling it. You have an annual exemption of £11,300, so make sure that if you're looking to dispose of assets such as shares or property, that you're kind of planning ahead on that to make use of your annual allowance going forward.
Dave, I'm thinking of having a bit of a flutter on some exotic risky investments like SAIS. What's the threshold?
That sounds really exciting, John. You can invest up to £100,000 in SAIS schemes in any one tax year.
So what's going on in the world of the ISA?
Well, John, ISA investment limits are actually quite generous. You can invest up to £20,000 in any tax year in an ISA. Remember that investments in an ISA, income generated from an ISA, is income tax free. Don't also forget your children's ISA for people under the age of 18 with another fairly generous limit of £4,128 a year.
Let's talk about some tax tips for couples. I'm thinking about selling some stuff, some assets. Can I use my spouse's or my partner's allowance?
Spouses, yes, so transfers of assets between spouses are capital gains tax free. However, there may be other implications. Spouses doesn't necessarily mean partners unless it's actually a same-sex partner properly registered. So if you're just shacking up, do you know anybody like that, John?
Yeah, a few.
Yeah, a few of us. Then you won't be able to transfer assets capital gains tax free.
Dave, there used to be tax advantages of being married. Is there a married couple allowance these days?
Well, married couples allowance is pretty well phased out now, but you do have the ability to transfer unused personal allowance from a non-tax paying spouse to a basic rate tax paying spouse.
Dave, let's talk about pensions.
How exciting, John.
It certainly is. For those of us who are looking into the deep, dark, distant future of our retirement, is there anything we should be doing in the next week?
Pensions, we believe, are generally a good thing. Better have something than nothing. Pensions contributions are also tax deductible at the moment, and particularly for a higher rate taxpayer, the allowances there are very generous. You can invest up to £40,000 in any tax year and also carry back against previous years' unused allowances as well. And be careful because there are restrictions under certain circumstances.
Wow, 2017-18, what a year. It's been pretty decent. Is there anything else we should be thinking about?
Yeah, certainly look at your potential income levels. If you've earned over £50,000 and you have children, you will be in danger of losing your child benefit allowance. And if you've earned over £100,000, you will be starting to lose your personal allowance as well. So there's a really horrible tax band from £100,000 to £120,000. The use of pension contributions is a great way of bringing you just below those limits if you've just gone above them, so act very, very quickly for this year. Thinking ahead to 18-19, possibly a case for better pre-planning.
That was Blue Sky's top 10 tax tips to end your tax year. If you need any clarification, go to www.bluesky.co.uk.